Welcome to Just Minding My Business Media. I am so happy that you stopped by today. Well, you are in for a huge treat. Our guest today has more than 20 years of financial service experience and has been recognized as one of San Diego's 500 most influential people for 2025. Chad Taylor started Seapoint Wealth Advisors with one goal in mind: assisting others to feel confident about their financial future. Well, welcome, Chad. How are you today?
Good, Ida. Thank you for having me.
Yes, and right now, as of today in the present, there's not a whole lot of confidence about the future and the finances. So, this conversation is going to be well needed today,
Sure.
for sure. So, one of the questions that I have for you: what problem did you see in the industry that made you start Point?
Well, yeah, I've been with the big firms so I've been doing this, like I said, for 29 years, which sounds crazy to say, but 29 years. And so for most of that career, I've been with the big firms. And what I noticed, as I was getting later on with the big firms in my career, it became about what they were kind of wanting you to sell to your clients to earn compensation, right? And so if you wanted to get your bonus, you had to sell a mortgage. If you wanted to get this bonus, you had to do a financial plan and charge for it. And that's not what this business is about. My business is about taking care of people and making sure they're taken care of the way they should be taken care of. It should be about how you need to sell something to them to get paid. And so as it started moving more in that direction, I didn't want to be a part of it. And so I wanted to go someplace where I was fully independent and made the decisions for my clients based on what's right for them, not for how I was getting compensated.
Yes, and that's huge because most of the time when people come to a financial advisor, they don't know what they don't know.
Right.
They are looking for 100% guidance.
Yep. Yeah, and sometimes they unfortunately they think they know more than they do, right? So they come in expecting one thing and they're trying to go a certain direction with it, and that's really not how it should be done either. It should, they have false misconceptions on what should be done to their portfolio. They want to trade stocks or they want to be pick the individual stocks, pick the individual funds. And what I found in my career is people rarely fail at their investment goals by picking the wrong stocks or picking the wrong fund that they own. They fail because they try to be too aggressive or chase the hot returns and not following a game plan, right? And so it's not about picking the right investments or picking the right stock. It's about finding a game plan, sticking to that game plan, and monitoring it as you go along the way and make sure you're implementing it correctly.
Yeah, and I think most people want to see the returns now,
Right. Yep.
and in my opinion, the financial market is not like that.
No.
Not at all.
No, we want immediate returns, right? We want immediate satisfaction on what we do. We want to put money to work and tomorrow be rich. And that's not how it works, right? It takes time.
Yes, and that's most anything in life worth
Right.
doing,
Yeah,
for,
exactly.
for sure. So, who do you serve best, and why do those people struggle, even when they are make great money? Let's talk about that.
Yeah, I mean, we serve mostly high earners and small business owners. And, for the higher earners, a lot of time the struggle is lifestyle creep. You're doing well, you're making good money, but you're making more money, more reports come in, all of a sudden, it's a new car, it's the new house, it's a new kitchen that you got to put in. And so the lifestyle creep really will hit people hard, and it's hard to avoid, because especially with inflation and things going on, and you start spending more, and the more you spend, the more you have to save to hit your retirement goals. And so that's hard for a lot of people is the high earners. It's you got to force yourself to save, not just spend. And so I think that's a big one for them. Small business owners, I think a lot of it comes down to the fact that they have so much of their wealth tied into the business, and they're really depending on that business sale to hit their retirement goals, right? Well, if you haven't been saving along the way, then you're really stuck on what that business sells for to meet your goals. Because what happens if you want to sell and the market's down or your valuations are different than they were previously, or not paying the same multiple they were 5 years ago, and you can't hit your retirement goals? And so my business owners who I work with, and we set up, 401ks or profit sharing plans to kind of save along the way.
Hmm.
Well, now, you've got the business, which is the bulk of your wealth, but you've also built up some liquidity along the way too, which gives you some flexibility at retirement time. So
Hmm.
it's, failure to plan, it's lifestyle creep, it's not sticking to, a savings goal and getting to what you're trying to accomplish with, your retirement needs, right? So it's things like that is where I think people struggle.
Yeah. So in today's economy, how are you directing your clients? Because everything is so volatile right now.
Well, yeah, and you got to focus on long term, right? So the market's volatile, but it's also really expensive going into, the Iran war and some of the artificial intelligence stuff going on with software. And so, when you're trading expensive, it doesn't cause much to cause a sell-off, which is what we're dealing with now. But I always tell my clients you can't make long-term decisions on short-term noise, right? So
Hmm.
we can't make decisions about our retirement 10, 15 years from now based on a market pulling back 10%, right? Because that happens. I mean, part of being an investor is you're going to have times when you lose money. The market's going to pull back 5, 10, 15, 20%. And
Hmm.
it's how you react to those markets is really what makes you successful as an investor. So when I look at today's environment, it's not trading on fundamentals, it's trading on noise. It's trading on the headlines of the day. If oil's up today, market's gonna be down. If oil's down today, market will be up. Did Trump say something good about the war? Market will be up. Did we say something bad about the war? Market will be down. And so, how do you trade on that when it's just based on headlines? And so eventually though, the market calms down, like kind of like the Russia-Ukraine war, it lasted like 2, 3 months where the market was very volatile. And then after 2, 3 months, we kind of get rid of the noise from that war and we don't really think about it as much. Then we go back to trading on fundamentals and the market did really well for a long period of time. So what I do is I try to avoid all the noise that's out there and just look at the math. And the math kind of tells us, okay, this is how we should be investing and allocating, but we don't really trade on the noise.
Okay. And that sounds very good to me because right now we have so much noise
Yep,
that it's very difficult to keep up with, and it creates a situation of fear.
right. Yeah, because you wake up one day and the market's up 1,000 points, and then you're like, oh, everything is done. We're going to recover, and the next day you're down 500 points. Well, that up and down will drive people crazy, and you just can't focus on it. You got to just think, okay, this is the market. It's volatile right now, but I don't need my money today. I need my money down the road, and 10 years from now, we'll forget about the fact that we had a pullback because of the Iran war, right? And that's what you got to kind of focus on. Now, if you got money that you need in the next year or two, well, that should be in the market anyway, right? Because that shouldn't be money that's at risk because that's a short-term need. And so you have to time your assets, your time horizon. So if I have a short-term need, I can't take risk with that money because I need it. And if the market pulls off 20%, I might not have that money ready for me in a year because the market hasn't recovered yet. But if it's long-term money, well, then it's a long-term investment. And then I can go out and be more aggressive with it because I got time to go through the market volatility.
Hmm. Uh-huh. And that's definitely sound advice because, you know, and it's always good. Don't use money you can't afford to lose,
Correct. Yep.
and that's just keeping it simple and straight to the point. So if people want to work with you, how do they connect with you, Chad?
Yep. So we've got a good team here in San Diego. And so the best way to reach out to us is either through our email, which, would be my email, which is chad@seapointwealth.com. And it's C like the ocean, SEAPOINT wealth.com, or our website, which is seapointwealth.com, which has information about our team and our firm and our strategies on how we manage money and all of our group.
Okay. Okay. And we kind of talked a little bit about some of the mistakes that people make with 5 to 10 years, the planning piece.
Uh-huh.
So let's talk about that as it relates to retirement.
Yeah, well, I mean, so you're talking about the planning piece, right? So where
Yeah.
people make mistakes going into retirement, and so I mean, first off is people fail to plan is the biggest mistake, and so as you're thinking about your retirement, you need to know if you're 5 years or 10 years out is when you really need to start thinking about, okay, am I on track to meet my retirement goal, and what's the end game? And so what I tell people is, the first step is to say, okay, based on my expenses today, I need to figure out what I need in 5, 10 years to generate that income to replace it if I'm not working. And so, and obviously if you have kids or college, back those expenses out. But,
Mhm.
if I need to be 65 and make $100,000 a year of income, I know I need about $2.2 million of assets to generate $100,000 of income. So then I need to look at today and say, okay, where am I at today? What am I saving today? And if I take an average return on the market, am I doing enough to get there in 5 years or 10 years to generate the income I need during retirement? Because at retirement, cash flow is the king, right? So, if you got the cash flow to meet your expenses, then you can retire and be comfortable. And so you just got to kind of figure out, what the end game is, how much money do I need to live off of? Obviously factor in pensions and Social Security and rental income or whatever else it is. Then you got to back into where you are today and build the right allocation to get you to that goal and also make sure you're saving enough to get to that goal.
Yes. And a lot of times people, let's say, people in the workplace,
Yep.
they are dealing with the 401ks and that kind of thing.
Yep.
And I mean, I've been in that space before, and half the time when the representatives come to you to talk about it,
Yep.
they don't even know what they're talking about. They don't understand.
Well, yeah, you're getting, I don't want to say entry level, but you're not getting people that really, that know this business, right? You're getting people who can go out there and talk about the basics of the 401k, but they don't really know the investment side of it. And they don't know your situation to give you the right advice on how to allocate your 401k. And so, we, help with 401ks. Obviously I don't bill on it, but for the clients I work with, I help them manage their 401ks, make sure it's allocated properly to fit the plan. But the one people who that aren't working advisors, that I see the big mistakes with 401ks is they play with it too much. They're like, oh, market's down, I'm going to go to cash. Oh, the market, market's doing really well, I'm going to get super aggressive. And your 401k, it's a long-term investment for you, and you got to make sure it's part of your plan. But you can't play with it, right? It's
Hmm.
not a gambling account. And I think where people make mistakes is they try to time the market and try to trade it. And it's just the success rate on that is probably less than 2% doing it right, right? Because you have to be right on the out when you get out of the market. You have to be right getting back in. And so, I think that's a big mistake people make is trying to trade that 401k account and mess with it versus just sticking to a good game plan and making it part of your overall financial picture. But you need somebody, if you don't know what you're doing, you need an advisor to help you incorporate that in your overall plan.
Yes, absolutely. And I think most people in the workplace don't know.
No, they don't. And
They
because they
don't.
don't deal with it, right? I mean, it's not their, they're doing their regular job and they don't know how to
Hmm.
deal with investments. I mean, that's what we do for a living. But, if you're a CPA or, a pilot or whatever else you are, you know how to fly a plane. You don't know how to manage your 401k because it's not your job.
Right, exactly, exactly. So, what do you say to someone that says, I make good money, but I don't feel in control? What is that?
Yeah, and I think, there's two things with that. One is you look at what your cash flow is and what your spending rate is, right? Do you have that lifestyle creep we talked about before?
Mm-hmm.
Because, a lot of times we make good money and we go out and buy the nice fancy things, and all of a sudden I don't have any money because I spend it all. And so you got to look at, where am I spending my money and what's my priorities? And the other one is, though, it goes back to what we talked about first is like I just had a conversation with a guy the other day who's younger, and he's doing well and he's saving. He's got RSUs and he's got options, but he's like, I just, he makes, I don't know, he probably makes 400,000 or 500,000 a year, and I just don't feel like I have anything. And I looked at him like, well, let's back up here for a second. You've got your 401k, it's worth this, and yes, you're saving money here and a little bit, but like it doesn't, like we talked before, it doesn't grow overnight, right? And so let's just do a 10-year projection on this. Let me show you what you'd have in 10 years if you just kept on the same pace. And he's like, oh, wow, like I'd have that much. I'm like, yeah, it's time, it's time. Let that compounding effect happen. Just because you put it in a day, market could be up or down. It doesn't make a difference. Let's go out 10 years and see what it looks like. And that's what people get, I think, hung up on is, it just takes time for this stuff to work. And,
Yes.
and the more time you give yourself with the compounding, the bigger it gets. And the earlier you start, the better off you are. And I think it's just the impatience, right? People get impatient because they want to be there now, and it just
Mhm.
takes, it takes discipline and time to get to where you need to be.
Yes, a lot of discipline and all of what you said, tune out the noise, stick to the plan.
Yep. And it's hard when, when you're losing money when the market's pulling back, right? It's like, oh my gosh, I had $100,000 and it's down to $85,000 and, I just sold and it's emotion, right? Fear and greed drives that. But, if you turn out the noise and that, goes from 185, then, a year later it's 120, so but it's the emotion drives us in these different markets that we're in.
Yes, yes. And right now, everybody is full of emotions
Yeah.
based on what's happening in the world.
Yep.
And it's very normal to feel some kind of way.
Yeah,
But
absolutely.
you've got to pull back and really look at reality.
Yeah.
This is happening now, but it's not going to be forever.
Right. Yeah, I always tell my clients too, which, I always tell them, look, we're going to work together for a long time. And the one thing I can guarantee you is there's going to be years where I lose you money, you know, because you're not going to make money every year.
Hmm.
But if we stick to the plan and work together over a long period of time, you're going to make a lot of money, But each year, I can't guarantee we're going to make money each year.
Yes, yes, because things fluctuate.
Right.
Things happen, manipulation with the markets,
Yep.
all kinds of things happen.
Yeah,
And
things out of your control.
yes, exactly. So to make that guarantee, it's just setting yourself up,
Yeah,
for it's just not feasible to do for
correct.
sure.
Yep.
So tell us in one sentence what your money philosophy is.
Well, I mean, it's not a very sophisticated one, but to keep it simple, you know, don't overcomplicate it. And I say that, we have, especially with things have changed over the years where, stocks and bonds used to be you buy stocks and the bonds protect yourself from the stocks. But more recently, we've seen that when the market sells off, your bonds have sold off too, right? And so we have added some kind of hedging strategies to kind of protect, give us some true correlation against the market. But for the most part, just keep it simple. Like a lot of times with my clients, I'm like, sometimes the best thing I do for you is nothing. You know, like we don't overthink this. Like, we got good investments, we got a good plan, we got an allocation. Let's not react. Let's just keep where we are and we'll ride this out. And so it's, don't overcomplicate it, keep it simple, and follow your game plan.
Yes, and I like that philosophy. Keep it simple, keep it stupid. It always
Yeah,
works.
yeah, right. Yeah,
It always works in almost everything because the more you abstract it, you just lose the meaning.
yeah, yeah, absolutely.
You lose the meaning. Wow, Chad, this has been amazing.
Good.
So again, how do people connect with you?
Yep. So our website again is Seapoint Wealth, Seapoint wealth.com. And my email is chad@seapointwealth.com.
Okay, okay. Yeah, so it's like, I like people that are straightforward, to the point, and you have gave us so many gems
Good.
that aren't complicated, wasn't abstract. And I love that about you because I'm like that kind of person. Give it to me straight.
Yeah. Well, I think that works best too, right? I mean, like I said, I always like laugh with these advisors like, oh, you come with me and I'm going to outperform the market. And it's like, no, you're not. Like, like I've been doing this a long time. If you're with a good advisor and he picks fund ABC and I pick fund XYZ, we're going to be in the same ballpark in the next 5 to 10 years. We're not going to outperform the market because we're going to be in the same ballpark. And the guys who's like, oh, I can pick this and time this, they're the ones that are trying to sell you and try to trade things and try to and it might work occasionally, but over the long term, you're gonna get burned. And so, I'm doing this for almost 30 years. Like I said, the philosophy of keep it simple, don't overcomplicate it, pick good investments, monitor those investments, make sure they're still good investments, and make tweaks here and there, but stick to your game plan.
Yeah, and I think that one of the things you just touched on is for people to pay attention to the languaging,
Yeah,
because the languaging is going to tell you if they're for you or they're not.
yeah. If it seems too good to be true, most of the time it is.
Yeah, pretty much.
Yeah.
Thank you so much, Chad. I really enjoyed this. I learned a whole bunch in this short period of time, and I know that my audience is going to learn as well. We appreciate you taking time, and audience, we appreciate you as well.
Thank you. Thank you for having me.
Absolutely.